Alrighty, ladies and gentlemen, good morning. It is Monday. What is the date today? November 7th, Monday. So good morning. I'm going to do a little 4-hour sweep here, do our Monday macro analysis, try to figure out where we're heading this week, what's going on, what we need to be looking at, what happened last week. We absolutely killed it last week. We were just looking at it, did over 1,100 pips last week, closed, killed it, already hit target for the day, legit 2 seconds into the market open. It's funny, I actually got the screenshot of it. It says 2 seconds into the market open when all that pound Aussie and pound Kiwi gapped up, it hit target and the bot auto closed it. So it was actually pretty funny. It was actually 2 seconds. So anyway, we killed it. God, I don't even know where to start with last week. We did very well last week. It was a very good trading week. And positions from Friday, still going pretty well. Like I said, all that pound off the lows was killer. We did very well. Let's try to do it again this week. 4-hour sweep. Let's do our 4-hour sweep. Let's just get right into it. Butt corn. Obviously it's made a nice little move up because of it was kind of a risk on sentiment into last week. And we know that this is positively correlated with the U.S. equities market. Again, if you want to trade Bitcoin, you have to be paying attention to what the U.S. equities market's doing. It is locked in, and that's just the way it is. Right now, we're still near the low of that range. I wouldn't be getting too excited yet, and we need to, again, like we were talking about, we need to pay attention to what's going on with U.S. equities, and we'll get to that. But right now, it's not terrible. It's selling off at an expected area. There was some issues back here before, we don't need to get into all that. But it's completely expected where it sold off and why. Everything's pulling back. So, it's probably not a good idea to be entering long here necessarily. And it depends on your time to hold. What's your time frame? If you're looking to invest in Bitcoin, this is not the dip you're looking for. These are not the droids you're looking for on Buttcorn. I would wait. Personally, not financial advice, just life advice. Just wait. It's very likely going to be going lower than this, and I think we all pretty much know that. Where it is in its cycle it's probably not the bottom. Even though it looks like it's holding, it's been like 4 or 5 months it's been in this range, and then nothing over the last couple months. Just completely dead over at least the last month. So we had a good run there. We had a nice pop when equities hit the low and started doing their thing. So, a little more risk on there toward the end of the week, and on into last week, but it's just not it right now. As far as what we're looking for right this second, we're obviously dropping up off the high, and we're just not quite there yet. We're not quite there to where you would be looking for a day trade. This is very likely, and we talk about center mass all the time, but this is very likely going to just reject its center mass of whenever there's a big full-bodied move. Watch center mass. We'd already know what's going to happen here. It's going to come up here and it's going to reject. It's probably going to come down and break into somewhere in there. Leave it for now. Skipit.com. Dollar index. What is going on here? So, we've been all over this thing. That's a messy chart. Just a lot of lower time frame stuff going on here, but lower high. The important thing is we're making a lower high. If you go out, you can see what happened. It wasn't a big surprise here hitting supply. Just simple supply and demand. As far as that's concerned, we were all over this, and we traded this at the end of the last week. So, good game there. It's just pulled back. It's making a lower high. This is what we were expecting. The dollar is still just dumb high on the macro. Now, we did just get some rate hikes and no end in sight. Powell was very clear. I think his quote was, "We're a ways away," was his quote. "We're a ways away." There, no slowing even in sight is what he's trying to get the point across to the markets, that we still have a long way to go. to expect more rate hikes that we're not even looking at slowing yet. Now, that being said, the phrase data dependent comes to mind, and I think they're going to watch the job market and just see what's going on. They're going to do what the data would suggest that they do. You know, we all know what's going to happen there. And it could easily, very easily be a surprise, 50 basis points on the next time. Honestly, we were expecting the potential for that to happen this time, and it didn't. So, one of these times they're going to slow, but they're not going to they're not going to warn everybody ahead of time. I don't think they're going to do that. So anyway, point is, the dollar is kind of technically still a little bearish, but on the high. So, and what we're fundamentally bullish with rate hikes and inbound. We know that there's more rate hikes coming, but it's just selling off. It's pulling back off the news. It was a sell the news event. It's not a surprise, and we faded it. We were 4 for 4 on the fades last week. Like over the last week to week and a half, there were 4 big news events that all got faded. Every single time we got it. It's pretty crazy. They all went the opposite direction. So that tells you something right there. So we broke the low. And here's what's important on the dollar right now today. We've already made a crazy run down. We're not quite to where our projected low would be statistically. So we have broken a low though. And every time we break a spike low like that, it's time to start paying attention. It's start to manage trades, manage your dollar trades, move stops to break even, take profit, something. That being said, I do think we're going to end up a little bit lower. But you don't want to start selling the dollar now after breaking that spike low like that. Not a good idea. Just again, flimsy supply down there. There's not really much going on. We'll look at this on lower time frames, but we already know what we're looking at in a group with the range tool. But as far as just the macro analysis goes, it's a range. It's a range, and we're approaching the low. We're making lower highs. It's could be a potential contraction coming where it makes a higher low and then runs back up and starts to have progressively reduced volatility over time, lower highs and higher lows. That's a possibility. Right now, what we don't want to do is be entering short against the dollar or on the dollar. We'll watch that on lower time frames. So again, we're trying to figure out what's likely to happen over the next couple days and today. Again, at this point, we talk about this pretty much every day. At this point of the day, it's currently almost 5 a.m. Wall Street time. And at this point, we're about to get a new 4-hour candle open. We need to figure out what the next 3 candles are going to do. Our 5 a.m. to 9 a.m. candle, our 9 a.m. to 1 p.m., and then our 1 p.m. to market close candle. So we have 3 4-hour candles left in the day, and we have to figure out what is likely to happen relative to our current place in the universe. What's likely to happen over the next 3 candles? And, there's not really a lot to go on. We have broken a low, so be aware of that. I think it's likely that we pull back up into a range. You can see what's going on right here. You've got the obvious right here. So there's a good possibility that we end up putting in some type of range like this with your buyers and sellers. You know how we classify our blocks here. Nothing to do but wait for this candle to close. Probably going to pull back up. That's my guess, but it'll be slow. Aussie dollar moving along. We'll try to get through this quickly today and get some trades in. I want to be long Aussie dollar on the macro. We've talked about this for months, this range expansion that's happened, and we're just again down here on the low. We're kind of confirming the pullback up off the low here. We want to be long on Aussie dollar for sure, but from lower. What's likely happening here market cycle wise is we're just in a level 2 range in the cycle. We've come down off the low. We talk about this all the time. Our spike low into a consolidation, and we're always looking for the second leg into the money. You know, the shelf is there. We already know there's buy side liquidity sitting right here on the top of this range. So we have not tapped that yet. And it's likely that we're going to end up running up there. Now we want to buy as low as we can. You know, if we can buy in the bottom end of this range somewhere, if for some reason this sells off the top, bounces, makes a higher low, then we're looking to come up here and distribute inside of the gap. There's a gap right here in the money. And these get filled with, you know, in our market cycle, these generally tend to get filled. You know, so it'll likely come up and consolidate inside of that gap right there, where it's where the money is. You know, follow the money. Where is the money? It's the money that you cannot see that you need to be paying attention to. It's not what's in the candles or on the chart that you need to pay attention to. It's the money that you can't see, where there's nothing there. That's what you need to pay attention to. So the point is, we are at the top of the range. Man, we've been working this thing back and forth too, killing it. But we're back to a range high. We're back to a range high in supply right now. Not a good idea to start going long Aussie dollar from here. And we'll look at it on lower time frames and figure out where we are relative to our daily and weekly projected highs and lows. Statistically, where are we? So probably going to reject and come back down a little bit. But if it pulls back and makes a higher low inside of that macro range we were just talking about, we've stepped up a level. We've stepped up a level in the market cycle. This is starting to look like a low of the market cycle. And again, we're going to be shooting for this money right here above this shelf, where your shorts that were correct in the move are going to get stopped out and your breakout buyers are going to start entering. We're going to eat up that buy side liquidity, because what do we need if we're a smarter trader and we were already long, we're looking to get long and we're looking to take profit? We need suckers who are willing to buy it from us at a higher price, right? So we're going to be watching that money on Aussie dollar. We definitely want to be watching this for a long. There's a massive potential to move up on this. And it's probably going to be when the dollar ends up breaking the low and coming down. But every time this pulls back down on Aussie dollar, we're trying to buy the bottom of the range every single day. Every week, we're trying to buy the low of the week on Aussie dollar until it goes. Huge potential. Euro dollar, transitional period, where we do a lower low, lower low, lower low. We're going into a range where you transition from lower lows to a range. It's likely going to be just roughly something like this is what's actually happening, is there's a range starting to form and we haven't made it back to the top of it yet. It's kind of a messy chart, just stuff from before. Need to clean some of this stuff up. A lot of it's lower time frame stuff. Obviously we caught this the end of the week last week, just closed some of the stuff out, killed it, hit target 212 pips. Ooh, we be killing them. Again, watching the dollar, euro dollar. We know the correlation between the dollar index and the euro specifically, and how the dollar index is weighted 57% in euros, and why we need to watch the euro to understand what the US dollar is going to do. Right now, we're at a range high without looking at where we are. I would not want to be long here. Obviously, we've made an extreme move in a very short period of time. 250 plus pips in a very short period of time. Those types of moves are not sustainable. We know what's going to happen here. So we're looking for there to be some type of a pullback. It's probably a range that has not developed yet. You can already see your boundaries. You've got your buy side, and then probably going to be your sell side up here somewhere. We'll wait for this to close here in 5 minutes, but in 5 minutes, you're going to get a candle close here that's going to define the upper boundary of your range. So we don't want to be long at the top of a range, right? In traffic here to the left. So there's likely going to be some reversals. So there's something that we could potentially watch today for a trade, euro dollar, just on a reversal. And again, we'll look and see where it is, lower time frames. But I mean, it's pretty self-evident what's going to happen there. Same thing, euro yen. I mean, it's just very clear, just simple supply and demand. I mean, we've made, again, off the low, we've made a big move off the low. I mean, do you really want to be long in here? Probably not a good idea. Everybody who was long and correct in the move from lower, they're taking profit right here. Accessing liquidity, taking profit. So leave that alone. Skip it. Same thing, EuroCAD. Starting to see a pattern here. Start to see what's going on all these euro pairs are likely to a point where they're at minimum going to distribute sideways, and that's generally what happens here. Is you pop up into something like this, reject a couple times, distribute, and then pull back, and then we'll be watching whatever to the downside. As far as the cycle structure is concerned, we've been all over this one too. We had a shark fin, nailed it, and swing wise, you would still want to be long from that sweep on the low. Look, range was held, liquidity pool on either side of the range, right? Building up contracts on both sides, took out the longs, and now it's went up, distributed in the gap here where the money is, right? And now it's gone into another level higher, another range. You can see the market cycle playing out. You generally get that spike off the low into a consolidation and take the second leg up through the gap. It's the same playbook every time. It's the same stuff. We kill it every time. And it's just distributed in a range. And we can see where the range is here. You can see where our boundaries are. When you start to see the markets this way, everything, you can't unsee it. Everything gets very clear. And once you see it, you can't unsee it. This is why we don't do trend lines, because what's actually happening is not diagonal. It's vertical and horizontal. So EuroCAD come up off the low. We caught it on Friday. Great move. It's likely to pull back. Let it pull back. Define the boundaries of whatever range it's going to make. Hopefully it makes a higher low and then pushes through and runs back to the top of the range. We'll be looking for a pullback on this. Starting to get the picture painted that the euro is going to pull back today. So let's keep that in mind. This looks like an altcoin chart. This is hilarious. Euro pound. Obviously this is pulled back down on the pound strength. We know the pound is currently the strongest currency. Relative volatility wise, the pound is very strong. It's starting to overtake the euro short time frames now. The pound strength has obviously moved against the euro here, the euro relative to the pound. And again, we talk about relative volatility and why it's the most important concept in trading is understanding why that, this one has already dropped off. The euro itself is likely to get weak and the pound is strong at the same time. So this was an obvious short. I actually had this short on another account, but already closed it. It closed it as a basket. So same thing. I mean, you can see where we are, you can see what's going on right there. If you classify it that way, you have sellers on the highs and buyers on the bottom. We don't want to be long at the top of a range, that we know. So here's the thing, after a big move like that, and again, I'd have to look at it with the range tool and see where we are statistically on the daily and weekly candle, though I know the weekly just opened, but this is a pretty decent sized move for that pair. We probably don't want to be entering short now, even though what's likely happening is this on a higher time frame. It's just a big range and we're entering the buy side and we just sold off the top of it. My Jackson Pollock artwork here. So basically we're entering the point where we're probably near the low of the range. So we don't want to be short. And just price action wise, PA, like we know what to do with these big full body candles like this. Whoops, alarm's going off telling me to Look at the 4-hour candle. So we just got a new 4-hour open here. That's why we're doing this. So likely to pull back up a little bit and go into some kind of a range or something. But I wouldn't want to be long here because at some point it's probably going to go lower too. So it's not a good entry. Skip it. But you can get the idea that the euro is weak. Likely to be weak. It's already made a big move and it's probably going to turn over. Euro Aussie, same situation, lower highs, and we're just back on another one. Obviously not good there. Big, huge engulfing candle, which doesn't really mean anything. But as far as the distance that's been traveled and the time that it's happened, this is likely to pull back down. We have already gotten a kind of the picture painted that the euro is likely to retrace. Skip that. Euro Kiwi. This one is more subject to the Kiwi move. This is still low, actually. I think on the macro, these are going to be going higher. I just don't think that right now, we're talking about what's going to happen over the next 2 or 3 candles. It's probably not a good entry long. Euro Aussie and Euro Kiwi tend to run together because of the Aussie and Kiwi. So it's probably just not the right entry long. Obviously, we're just getting a neutral consolidation right here. There's really nothing going on. Very little volatility, very small bodied candles, nothing to do or say there. We did just break the low, and you know how I am about that. We just broke a low down here, and you know, the other day we did take this long. We were long here the other, I think it was Wednesday or Thursday. I remember going long here. Realistically, if you happen to catch this on the broken low, then you probably want to stay long. It just may not be the right entry right now. We'll come back to that, but I'm probably going to see some higher prices at some point, even though the euro is weaker. And this is probably just going to be a weakness in the New Zealand dollar that's been on X Games mode, and it's probably coming down this week. So moving on to the pound. So euro overall, the picture painted is could be pulling back a little bit. So the pound, obviously, nice move off the low. You know, again, we had a very good trading week last week. May not necessarily be done yet. It's probably a dangerous entry. This kind of thing we know is just likely to at some point pull back, do something. I mean, you can see what's happening here. Probably not the best idea to be going along right here. We haven't seen the right side of this chart develop yet, and this could just be a range high that just slams down like this and pulls back and bounces and then runs up and does something like that, you know, Wednesday or Thursday. Who knows? You know what I mean? So is it a good idea to enter long now? Definitely not. We don't buy tops and we don't sell bottoms. This has already made a significant move up. It's just not a good idea. We're running into traffic. You know, if you wanted to do the supply and demand thing, you know, you're going to have some issues when we get up there. That being said, that doesn't mean it's going to run straight to it. So we don't want to buy high. We just don't want to buy high. We're trying to run distance and make smart moves, and we're just not going to do that. Look at it on lower time frames, maybe. I know the pound has already made a significant move. Pound dollar statistically has already hit its projected high of the day. Nothing to say there. Other than that, it's an absolute no-go on buying it. We do not buy at this level. We're beyond the level that it is statistically safe to buy. Again, we think like a liquidity provision algorithm, and we want to know when statistically it's no longer profitable to provide liquidity in the opposite direction, right? So if it's no longer statistically profitable for an LP to provide liquidity in the opposite direction, then we don't want to buy it either. So we don't want to swim upstream against the current. Pound yen, same thing. Again, this is very, very close. It was very close. Previous equilibrium, by the way, right there on the range tool. If you look lower time frames, you'll see that. That's why that's marked. So again, statistically near the high of the day, we don't want to buy the top of the daily candle. Very, very simple. Wait for this to distribute. It's probably going to distribute a little bit sideways and pull back a little bit. But when it does, You know, on the macro, it's just a big range. You know, this is what's going on here. We're near the low, but not on the low. We've already come off the bottom of it last week. And what we're looking to do is retest the top of the range, right? Price moves up and down in blocks of price. In range consolidations, up and down. It's very clear when you start to see it. And right now we're off the low. We were already long. I just closed mine and took profit, but there'll be chances to double, triple dip this as it pulls back into whatever is going to happen right there. We'll try to catch it again at the bottom of the range in the buy zone and get back in this. There's some very good trading coming. We're going to kill it. There's some really good trade setups that are coming, and we just need to wait. Let the trade come to you. Don't force it. Be a surgeon, not, don't beat it with a baseball bat. We talk about this all the time. Let the knife do the cutting. Let the blade do the work. There's no reason to bludgeon it to death with a baseball bat with heavy lot size. Oh, bot just closed something. So bot just took some profit. Bot's doing well today too, by the way. So pound CAD, obviously murder, death, kill on that. We're not even anywhere near target yet, but we're going to wait for it to pull back again. I just closed mine within a day trading context. I just closed mine on one of my accounts because, again, statistically, we are at the top of the day. We're at our projected high of the day already at 5 a.m., which is pretty wild. So we're probably going to get some pullbacks on the pound. We already know what we're watching here. And we'll, do our group strategy in a little bit. We'll look at lower time frames and look at actual strategy. But just very simple supply and demand, which is whatever, probably going to pull back. Right. And we talk about the transition that's happened here. We've been watching this for a while. A higher high, higher high, higher high, equal high, drop, broke the low. So it's likely to pull back up and make a lower high. So we're probably going to come up here, hit somewhere up here, and then roll over. There's a transition happening here where it's rolling over from higher highs to a lower high. That's just very likely going to happen. At some point, this pound is going to pull back and likely be in some kind of a range like that. And we're going to catch it when it happens. We're selling the top of the range and buying the bottom of the range. Any break of that spike low right there, we're long. Right. And this was the Liz Truss debacle. Speaking of Liz Truss debacles, it's confirmed now about the text message that the UK blew up the Nord Stream pipeline. Liz Truss sent a text message from an insecure phone, and now the cat's out of the bag that the UK Navy did it. So interesting there. Speaking of Liz Truss debacles, but that's when the pound did 1,000 pips in a day. That was brutal when that happened. I remember that, but we caught some crazy entries off of it. So as far as pound CAD goes, same thing with the pound. Same story being painted. We're high within our range today, and there's no reason to be entering long now because it's likely to pull back, and we're going to try to catch the bottom of the range when it happens. But we want to be long from lower. There's going to be some good day trades this week on the pound, likely. Pound Swiss, I don't mess with it too much unless it makes sense. Nothing to say about that. Just got to clean up chart, a whole bunch of old stuff. Well, that short was murder, though. Could have held that. Did 300 pips. Nothing to say. Same thing. I don't even need to look at it. I mean, I can see measurement wise. Yeah, I mean, it's likely near the high of the day, and this is just an area where you don't want to buy into. You see how the picture is also being painted on the pound of likely pullbacks. We kind of got the same thing on the euro. We're just at a point of likely distribution on the pound, and there's probably going to be some pullback. So we know that we want to weight our bias to the downside on the pound for today. Over the next 2 to 3 candles, we're gonna weight our bias to the downside. and look for the gangster entries on lower time frames. Pound Aussie, same thing. I mean, it echoes, it rhymes. It's a repeating story. Same thing. Actually, absolutely just destroyed this. This one hit target on open when the market opened last night. Bang, hit it. We still haven't hit our original target from the entry on Friday, but I closed out on one account, moved my stops to break even on another account. I'm going to let it go. Already hit daily target when the market opened because of this. I had a half a lot at basically from the bottom, and I think it was up like 140 pips or something when the market opened, and the bot just closed it because it hit my daily target. And the other one, I've got it open. Nothing to say. Pound Aussie, same thing. Let me flip over here real quick. It's probably may potentially have some room. This one is pretty deep, and the Australian dollar and the New Zealand dollar may be coming down. So if we're going to be looking to get long on a pound pair, these are probably going to be the ones that still have room statistically to run within their daily range. So we'll wait for this to pull back a little bit. Nothing to say. We don't need to. I mean, there's really not much analysis to do on this stuff. Basically, we're trying to figure out what's going to happen over the next few candles. And there's likely going to be some type of distribution or pullback or something on the pound. But these particular pairs, the pound Aussie and pound Kiwi, they tend to run together. They still have more room to go than some of the other pound pairs. So I would not want to be short pound Aussie, pound Kiwi. And the reason is relative volatility wise, the pound relative to the Aussie and Kiwi, the New Zealand dollar and the Aussie are likely to get weaker. So these may push up stronger than the rest of the pound pairs. You're going to be looking for something where the secondary component of the pair is likely to get stronger. If we're going to try to catch some pound pullbacks, but it's probably going to be against the yen and the dollar, something like that. Like if we're trying to short something, it's probably going to be pound yen and pound dollar, if I had to guess. So you don't want to be short here on pound Kiwi. If you zoom out a little bit, this still has potentially like some significant room to run up. We want to be long here actually. And that's what we got in on Friday. Got the gangster entry on Friday, killed it, still in it on 2 of my accounts. I'm still in this. So again, nothing to do. Wait for it to pull back. Very good entry. It's got room to go. The obvious answer is right here. This was a very important block of price right here. You know, if you look at this section right here, this is a very telling piece that happened right here, and that's where we always shoot for the top end of it. So that was your cut low right there, and we're always shooting for the top end of that right there. Plenty of room. We don't want to enter it long right now. We just rejected off the algorithmic hash. You guys know what I'm talking about. Wait for it to pull back. And if we get some type of retest off the opening range high, then we'll probably take it long there on pound Kiwi. I was just looking at it on another chart with the range tool, and it's probably going to pull back a little bit. But when it does, we actually may get long on this, which is running counter to the pound. We'll see. We'll figure it out when it makes a move. CAD yen, I don't trade it much, but it's very clear what's going on here. It's in a range and it's coming off the top of it, and we just don't want to be long up here. Clearly, it's very likely you're just going to pull back. It's a range contraction where you have lower highs and higher lows. We don't do the diagonal trend line thing, but just to illustrate what's going on, generally I'll circle your highs. You got a high, a lower high, an even lower high, but your lows are progressively higher. It's progressively reduced volatility over time. It's a range contraction. The range is contracting in on itself, going into lower volatility, not more. That's an unfavorable scenario for us. We want to be in expanding ranges, not contracting ranges. That being said, this is probably going down. It's a short, something like this. I would just watch, some wrong tool. I would watch this section right here for an area of pullback. Likely going to pull back some. CAD's going down. It could be because of oil. We know there's a fundamental correlation there. The Canadian dollar is priced in oil. So as oil falls, the CAD's probably going to fall. Probably don't even need to look at oil. It's probably at a high. I was going to say it's probably up at a high and is likely to come down. So what was that? CAD yen. Yeah. So this is probably coming down. And again, it's not a good entry short. I don't mess with this one too much, but sometimes it's in a good spot. If it were to retest up here or something, you can see the range that's developed. You know how we mark this off. You can see your buyers and sellers. Very clear. We stay out of the middle, right? It's a price action hamburger. We stay out of the middle. We only enter in the buns. Giggity. So don't diddle in the middle. You only enter in the buns. So we don't want to be entering short here because we're in the meat of the move. Skip it. That being said, it's probably going lower. Dollar CAD, all over this thing. It's at the bottom of a range, very clear. The dollar index, the US dollar, is also near the bottom of a macro range. So what we don't want to be doing is entering short here. Don't be stupid and don't say sells below this level. Don't do that crap. That's dumb. That's kindergarten level trading. Don't do that. Say, okay, you know, this is gonna break low. Don't trade like that. Don't enter it short now. You're entering at the bottom of a range that's very clear. Wait for it to pull back up or something. And if for some reason it dips down, it's probably not going to stay there. It'll get everybody short and then rip right back up into the range. We're only selling off the highs. And within our daily range strategy. So at something like this, it's very clear. Whoops. Put my range box back up. Just to illustrate what's happening here. We don't want to be short here. We don't want to enter short. That could be a very bad idea. And we've also just recognized that the CAD could be going lower. So we don't want to swim against the current here. The dollar has already pulled down significantly, and we caught it. The other just killed it, just murder all the way back to the bottom. And now we just don't want to be short anymore. No more trades. You don't have to be buying it yet, but it's definitely not a short. We'll watch this one. Mark this one down. I need to zero my marks out, but our watch list. But leave dollar CAD, write that down, and we'll be looking to probably buy the low of the day. Wherever the low of the day is going to be, we're looking to buy that on this for a retracement. It's probably going to pull back up, make a lower high, and then it could dump later. Again, we'll see what's up with the dollar, but this is just typical dollar. I mean, rate hikes inbound. I do think that this is going to go much, much, much lower at some point. We're up in the clouds here, but this is not the entry. You don't want to enter short now. It's just not a good idea. So skip that one for now. Wait for it to go higher to sell it. And honestly, the counter trend move for the retracement back up is what we're probably looking for. We're looking to buy the low of the day on dollar CAD, wherever that is. We'll look at it on the tool for an entry. It's just not a short right now. Skip it, but mark it down because it's going to be something. NASDAQ. We probably want, we want to be long from lower, basically short term. This is likely going to retest something higher at some point. Don't need to even zoom out and mess with it. We know that we're in a very well-defined range right now, and we're just at the bottom of it. Like this trading doesn't have to be difficult. Like we know what we have a bias. We have a very clear bias right now. And what we don't want to be doing is entering short on the NASDAQ. Risk on. We're likely entering a scenario where this is going to be risk on, but and this crazy thing is this could be bad for the dollar and the yen too. Watch the yen for sure. We talk about the carry trade, that institutional carry trade and rotation, and why we need to pay attention to the U.S. equities market to understand what the yen is doing. So we'll watch the yen as well, really, but this is kind of coming off the range low, and we don't want to buy this here. It's not a good long necessarily. We want to be long from lower, and if we were to get some entry like that or something on a pullback, then maybe. But we actually want to shift our bias probably to long short term. You know, we're just talking about what's going to happen this week over the next couple days after that wild move over the last 2 days. It's likely that we retrace. I mean, that's just logic. It's just normal. That would be a normal move for this to retrace back up. Looks like we got a previous equilibrium there. That's why we'll look at that on lower time frames later. But, you know, as far as structure, market structure is concerned, we don't want to be short down here, right? It's very simple. And when you look at it this way, it makes total sense. It's very clear and there's no argument. We don't want to be entering short unless you're, you know, a day trade is a different story. I'm not talking about looking at a lower time frame. I'm talking about where are we heading this week, and it's probably going to be up, right? S&P, same thing. We're macro low. We're in a what some people would call a bear market rally or just a retracement. You know, we're pulling back up a little bit. That's so low, but you know, we caught this the other day. I'm out of it now, but you know, we've just been all over this market, especially the S&P and the NASDAQ. I mean, we've been working this thing for a long time. We're just coming off the low. We're on the way back up. There's a big gap right here. You can see what's going on right here. So I'm sure that'll get filled out. Lower time frames, you'll probably see it. Nothing to say. Probably going up. I doubt it's going to be a good entry right now. Let it pull back a little bit. If this were to pull back a little bit, I would be interested in getting long just for the counter trend move. I don't know. We'll watch this. We'll watch it. Same thing. You're going to have this pretty much the same basic analysis on the most actually Western markets, even the FTSE and, you know, like the DAX and even the Nikkei to some, they all tend to move together. The Russell, NASDAQ, S&P, Dow, they all tend to make the same structural moves at the same time because they're traded as a basket. They're traded in baskets. So right now, same thing. I mean, you know, long from the other day still until we get higher. It's not a short yet. Got obviously a lot of wacky volatility on Friday, really last week. This was a crazy week last week. The last week there has been so much headline risk and so much data release risk just in the news, and there's been so much going on. Last week was wild. I'm surprised we did as well as we did. But realistically, we still want to be short from our gangster shorts up here from the, you know, before, you know, what's likely happening is cycle high and step down into a lower level range, right? Looking for that second leg down. You know, realistically, we're probably going up a little bit first, you know, and that's kind of what we're talking about. Actually, the Dow looks a little different. The Dow is up disproportionately by percentage relative to the NASDAQ and the S&P. That's why we were short the other day. It looks like it's going to go up a little bit, but probably reject. So, you know, we don't necessarily want to be entering heavily long up here. Not on a big green candle. It's probably gonna move a little bit and then whatever. Probably leave this alone, to be honest. We may have better luck with something like the NASDAQ that's much clearer at the bottom of a range. The S&P, which is somewhere in the middle, but the Dow is up disproportionately because some of those Dow components had some crazy days. I mean, we were looking at this last week. Something was up like 16%. I think it was like Caterpillar or something. It's ridiculous. It was up like a lot and it pushed this thing way up. But right now, again, probably not the best time to go long, but I could see it going both higher and lower over the next couple candles today. Probably going to go a little bit higher if I had to guess. It's just not the best entry right now. If it were to pull back a little bit, I would be interested in entry. We'll look at this. We'll look at this on lower time frames. It's probably going to pull back to the top of the opening range, and then maybe we'll get in. If we haven't hit target, the VIX, I'm not super concerned about the VIX. I just look at it every now and then. It's not a directional indication. It's just when volatility is likely. Oil, big ups from last week. We already know where we're heading. We've been getting long on this on the lows since, it made the move. So since it did the thing, don't want to buy it up here. It's not a good entry long. We're approaching a high, and there's a possibility that it pulls back a little bit, and we just don't want to. I do think it's going to go higher. I think we have much higher to go actually on oil. I think oil is going to go significantly higher, but it's not a good entry long. It's just not a good entry right this second. You can see where we are, just structurally. We're near the top of a range, a well-defined range. You'll see it on lower time frames. It's probably going to reject and come down, and the CAD's probably going to come with it. So we'll keep that in mind, as this is probably going to, we'll look for its high of the day, wherever that's going to be. It's still got a little bit ways to go. So if for some reason this were to break the high, we might be I would really be looking to sell it above this high right here. It's just not quite there. It's not see what I mean? Like, it's not a good long entry, but it's not necessarily a short yet. So we'll watch it. Skip it for now. Skip it. Silver, we already looked at this. This is ridiculous. Did 11% in 29 hours. That's not sustainable. We're in the money up here in liquidity, above the shelf. It's just extremely likely that this pulls back. So I'm still short. It's just ranging. It's distributing. It's in the distribution phase up here after making an 11% run off the low. It did 11% in 29 hours. That's near a record. And the last time it did that was October 22nd. I've already done the analysis on October 22nd was when that run started. It's made this a similar move and ended up down 14% over the next 3 to 5 days, down 14% after making that disproportionately large move like that by percentage. So what we don't want to do is be entering long up here. It's just not a good idea. Skip it. Staying short on it and scaling into it. Basically, gold, same scenario. Want to be long from lower, really, on gold. I do think gold's going to go long. We've talked about this for a while. We've been watching this for a while. I've been all over it. Gold is likely to be a long, but from lower, and we've caught it so many times off the lows and worked it back and forth and protecting our long, and we've just got back long, gangster entry, all the way up. But it's time to protect it short. We're hedged short as far as our bias. And same thing. I've just got some small position short just for the retracement. It's extremely likely that at some point this week it will be lower than it currently is. Same thing. It's up disproportionately within a very short period of time. It's that matters. You guys know that. We talk about this strategy stuff. Is a little bit different than the macro analysis, but it's not likely that this just holds up here and continues higher from here. It's much more probable, and again, this is a probability game. Looking at the market from a software developer's perspective and not from fundamentals or a finance perspective, the likely probability is that this pulls back based on the data. It's just the way it is. So what we don't want to be doing is entering long on gold up here. Everybody who's doing that's going to get wrecked. We're above a high. We just broke a swing high, right? You never enter long on a swing high, ever. And look at where we are. We're in supply after breaking a swing high. This is a distribution that's just going to do this. But we're looking for the transitional period. We're looking for the point where it makes a higher low. Where is it going to make a higher low? And we want to get back in long. We've already hit it once, but there's going to be a pullback, right? And we want to be long from lower, but from much lower. We don't want to enter long now. That's ridiculous. So it's just not it's not good risk management. It's not good trading to enter it long now, because we're likely just distributing in supply and it's going to pull back. And when it pulls back, it'll go into some kind of range and we'll find the bottom of that range, right? So we'll wait for this. Scaling into it, very, very low risk short. Obviously, you know, not sending like 20 contracts or anything like that. Low risk scaling in short, I think it's obvious. So, what's down? That was from before. Big W on gold. We've been working this thing. I don't know why that alert is there. I think that was from when I was trying to get into that. If it broke that level, to take another one. Get out of that. So that's unlikely that that's going to hit for any time soon. I don't think that low is going to break for a while. So what I think is going to happen is this is going to pull back and then go. We want to be long gold, but not from here. And again, it's about relativity is a very important concept in trading. We talk about this every day. Where are we? We're relative to certain landmarks structurally. And we just don't want to be entering long here. We want to be long from lower. For sure, be long gold from lower. You definitely don't want to be selling the bottom on gold. Talked about the fundamental floor on gold with ruble, Russia pegging its ruble to gold and forcing Europe to pay for oil and gas in gold or rubles. There's a game theory thing that's happening with gold that we do not want to be selling the bottom. There's a fundamental floor put in, and there's a technical floor being put in right now. This is not a short on higher time frames, but we definitely do not want to be entering long right now. We're talking about what's going to happen. These are 4-hour candles, and what's going to happen over the next 3 candles is what we're looking at today. It would not surprise me if this rolls over and just pulls right back down to the bottom of the range here. And then tomorrow, you know, do something like this. That would be normal. That would just be a normal move. So that's what we're going to look for until that changes. And if we get different information, we'll change our bias. But as of right now, that's what it is. So Cliff Notes, what's going on? What's the prognosis, Doc? Buckhorn, risk. I would be careful with risk assets right now, you know, like stocks, crypto, those kinds of things. I'm torn on this because like the NASDAQ is low and I think it's going to be a long, and that could be good for crypto. That could be good. We know that this trades in lockstep with the equities market. I would want to be long from lower within just like a midterm swing kind of perspective, kind of context. Do I think that this is going lower eventually? Yes. Do I want to sell it right now? Not really. I wouldn't necessarily want to enter short Bitcoin. But after the retracement happens, and it is going to happen after the equities market pulls its retracement, probably want to be short Bitcoin, but not right this second. Yeah. So dollar, again, waiting for the dollar to find its low. It's probably near it now. We don't want to be entering short dollar. We're looking for the low of the day on a dollar for a retracement back up. Pretty much everything else we talked about. The euro, a lot of the euro pairs are likely getting to a point where they're going to distribute at the tops of their ranges, putting in a higher time frame block right now that hasn't developed yet. Likely going to be pulling back. Euro dollar is not a terrible short right now, to be honest. We'll be watching the dollar index for its reversal to kind of enter on euro dollar, but not terrible. We'll look at it on lower time frames and actually figure that out in a minute. The euro overall, a lot of the euro pairs are likely at a point where they're likely to distribute, right? We just figured that out. The pound, a lot of the pound pairs have already made a significant move and they're sitting statistically at their high of the day. So we don't want to enter long either. It's probably time to take profit on long pound longs and wait for them to pull back to get long. So what it looks like is the pound and the euro are both likely to get weak. That sucks. We hate that. Those kind of days where the euro and the pound travel in the same direction. And we look at our relative volatility tool to figure that out, to determine what to trade. What do we risk our capital on? What's the highest probability of a successful outcome? Looking at all 28 combinations of the 8 major currencies, what do we risk our capital on relative volatility wise? What's likely to make a sustained move? And when the euro and the pound are kind of flashing the same signals, that's a pain in the butt, because it cuts out a lot of our options, because a lot of your trades are going to be based in pounds or euro. It's going to be pound something or euro something or dollar something. You know, the majority of the things that you're going to trade, at least with any kind of volatility. So kind of a weird situation there. We're likely looking to sell the high of the day on the pound and the euro pairs, and we're looking to trade those against something that's likely to be strong, that's already down, like the dollar or the yen are going to be your best bets. Probably pound dollar short, pound yen short, those types of things. When they get to their highs, and they're close now, those are likely to have they're likely to outperform. We want something that's going to be strong relative to a thing that's going to pull back down and get weaker. So that's kind of the thing. We'll watch the pound and the euro both for highs of the day today. Is there anything else that stuck out? Equities, or I would be careful being short, especially the NASDAQ. NASDAQ, keep coming back to the NASDAQ because of that range is just too obvious. It looks like we're going to get a little bit of risk on here, a little bit stronger short term. The dollar may range because of that. The yen may range because of it. It may be stronger, but rangy, like slow grindy. I don't know. We'll see. Oil, nothing really there. Gold and silver, talked about those. Very, very good opportunity here on some of the stuff. Very good opportunity for an outsized pullback, a disproportionate move, because of how large how statistically overrun these are. You know, they've just been blown out. So especially silver, big move on silver. And again, we want to be long from lower, right? But from lower, we're looking to take the retracement until we can get long from lower. What we don't want to do is buy at the top of a range back in traffic. Not a good idea. So we'll look at all this stuff on lower time frames here in just a minute, just kind of trying to do a macro analysis for Monday. What are we looking at? What's likely to happen this week? Again, it can change like the wind with these macroeconomic conditions that we're in. So, you know, if the information changes, your bias has to change with it. We don't do confirmation bias here. So we change our bias with the information. As of right now, what we see structurally and technically, I think we got a pretty good idea on what we're looking at, or at least over the next day or two. So yeah, I don't know. We'll look in and try to drill down in, refine it, and try to find some entries, get some pips in the bag. We killed it last week. Killed it. Confirmed over 1,100 pips. Closed. Confirmed. Killed it. Murder. Every single day we killed it. Let's do that again this week. I'm going to shut this video down, drill down into some group stuff, and take some entries and get some pips in the bag today. I've already hit daily target today because of Friday's entries, but I'm obviously looking to get back in. I'm trying to zero out and get back to neutral on one of my accounts. I got the bot running. The bot's doing pretty well so far. Yeah, so I haven't hit target. I hit target on one, haven't hit target on the other. And the third account is a YOLO silver and gold short that if it runs, it's going to be a very, very big day. If gold and silver come down today, it's going to be a 1 to 2% gain on that account with low risk. And low risk is the key. You guys know how we do it here. So anyway, hope everybody has a good week. As things change, we'll stick with it. We'll get into it. We'll get some entries. If things change, we'll do another video. Anyway, everybody have a good day and catch you later.